Hello guys, welcome back to another episode of our Why You Are Failing as SMC Trader video series. In today's episode, we want to study how to identify strong lows, weak highs in a bullish structure, and strong highs, weak lows in a bearish structure. This is very crucial for you to understand if you want to be consistently profitable in the market. Okay? Now, why do we need to study the concept of strong lows, weak highs, or strong highs, weak lows? Well, the reason why we need to study it and understand it perfectly is because it gives us the directional bias of the market. Okay? There are two major players in the market: the buyers and the sellers, or the bulls and the bears. Okay? Now, at any point in time in the market, you need to identify who is actually in control, because that's the only way you can be on the right side of the market always. Who is in control? If you don't know who is in control, then it's most likely that you'll be confused in the marketplace. And that's why you need to study and understand the concept of strong lows, weak highs, and strong highs, weak lows. Simple. Now, take a look at these two schematic diagrams for you. But before then, you may want to ask, what is actually a strong low, weak high, or a strong high, weak low? Well, let me first start with the bullish scenario. In a bullish scenario, you have strong lows and weak highs. Now, let me explain. Now, I'm going to give you one simple rule for you to be able to identify your strong low and weak highs in the market. All right? Now, take a look at this first diagram. Okay? Now, price took out this structure here. Sorry. Price took out this structure here. All right? To confirm this high. I don't need to go over that again. I've told you in our previous videos how to identify your highs and lows. All right, took out inducement there to confirm this high. Now, this low cannot be confirmed just yet until price takes out this major structure high here and close above it. All right, and as you can see, that happened here. So this becomes your valid low. Okay, now, how you can identify your strong low and weak highs in a bullish structure is that your strong low, that low that you call a strong low or a protected low, has to sponsor the move up that takes out the major structure high. If it doesn't take out a major structure high, that low cannot be regarded as a strong low or a protected low. Simple. It's as simple as that. Your strong low or protected low is the low that sponsors the move that takes out major structure points. Okay? And so therefore, this is a strong low, because it sponsored this move up to take out this major structure high. All right? And after then, it created a new high. But this new high did not take out any inducement or liquidity. And before you know it, price printed a new high. For this new high to be confirmed, it has to take out inducement. And as you can see it here, inducement is taken there to confirm this high. Okay? Remember, this is a weak high. Immediately you see this single scenario here, this simple scenario, you know that we are bullish. You know that the bulls are in control. Simple. The bulls are in control. Once price sponsors a move, the low sponsors a move that takes out a major structure high and close above it, it tells you that the bulls are in control. So the market is bullish. This low here is protected. Price cannot come down here to take out this low. The same thing happens here. This is a high because it took out inducement. And for this low cannot be confirmed just yet until this low sponsors the move up to take out this major structure high here and close above it. And as you can see, that happened here. All right, so this low is confirmed. Now, this is our new protected low. It's our new strong low. Okay, so we are not expecting price to come and take out this low because it's a strong low. The bulls are in control. It's a strong low. Simple. Okay, now price printed this new high. For this new high to be confirmed, it has to take out inducement. And It took out that inducement to confirm this high. Now, but this low cannot be confirmed just yet until this low sponsors the move up that takes out this major structure high here and close above it. And that happened. And therefore, this low is confirmed as a valid low. Now, this low is a strong low, but this high is a weak high. All right? Why is it called a weak high? It is because price will always take it out. Liquidity rests above every high and below every low. So there is liquidity on this high, so price has to come and take it out. There is liquidity here, so price took it out. That's why they are known as weak highs. But these lows are protected. Price must not come down to take it out. If for any reason price comes down to take out this strong low and closes below it, it therefore means that this uptrend is over. It has been converted to a bearish structure. All right, this is as simple as that. There's nothing mysterious or mythical about strong lows, weak highs, or strong highs, weak lows. All right, now the same thing with this bearish structure. Price took out this inducement to confirm this low. All right, and now price, this high cannot be confirmed just yet until price takes out this major structure low. This high has to sponsor the move down to take out this major structure low to confirm this high. All right, and therefore, as you can see, it happened here. So this high is confirmed. Now, because this high sponsored the move down to take out this major structure low, it is a protected high. This is a strong high. We are not expecting price to come and take out this high. All right, we are not expecting it to come and take out this high. Rather, we are expecting price to come and take out this low here because it's a weak low. Because this first scenario here has shown to us that we are bearish. The bears are in control. The bears are in control. So we are expecting the lows to be taken out while the highs are protected. All right? And therefore, this low cannot be confirmed just yet until it takes out inducement. And inducement was taken out here. So this low is confirmed. This high cannot be confirmed just yet until it sponsors the move down to take out this major structure low here. And as you can see, that happened here and close below it. This high is now confirmed as a valid high. Now, because this high sponsored the move down that took out major structure low here, it broke structure. That's why this high becomes our new strong high. All right? This is our new strong high. We are not expecting price to come and take it out. Okay? It's our new strong high. It's a protected high. Instead, we are expecting price to come and take out this low that this high produced. All right? And for this low to be confirmed as a valid low, it has to take out inducement. And here is your inducement in the market to confirm this low. All right? Simple. And this high cannot be confirmed just yet until it sponsors the move down to take out this major structure low here. And as you can see, and close below it, as you can see that happen to confirm this high. All right? So this high becomes a protected high, a strong high. Price is not likely to come and break it. If for any reason price takes it out and closes above it, it therefore means that this structure, this bearish structure, it has been converted to bullish structure again. To bullish structure. Okay? So now, this low cannot be confirmed just yet until it takes out inducement. Inducement is taken out. Low is confirmed. All right? High cannot be confirmed just yet until it sponsors the move down to take out this major structure low here. And as you can see, it happened. So this high is confirmed. So this is a strong high because it sponsors the move down to take out major structure low. So this is the way for you to understand your highs and lows. Your strong lows, weak highs in a bullish structure, or strong highs, weak lows in a bearish structure. Very simple scenario or concept, guys. I hope you understand that. Now, let me say one more thing here. Guys, that every time frame has its own strong lows and weak highs, or strong highs, weak lows. Every time frame has it. All right? And I want you to understand that there are major and minor structures. All right? So, like I told you, you may ask, what is a major and minor structure? Well, I told you price took out inducement here to confirm this high. All right? And then this low is confirmed when price took out this major structure high. I just want to show you what we mean by major structures and minor structure. Now, price went up. This low is not confirmed because it didn't take out inducement. And now this one took out inducement. Where? Here. All right. It took out inducement here to confirm this high. So essentially, this is your major structure. Let us assume that this is 15M. All right. This scenario, this diagram is 15M. Now, this is low, major structure low, major structure high. Okay. This is what is known as major structure points. Now, in between this major structure low, major structure high, and all these small moves that you find here, they are known as minor structures or internal structures. Like I said, every time frame has its own strong lows, weak highs, or strong highs, weak lows. Every time frame has it. Okay? And therefore, you need to understand that very well. You need to understand it very well. Now, how do you trade with this knowledge? Now, how you trade with this knowledge is simple. Take a look at this place. This, like I explained to you, this is a low, a major structure low, major structure high. All right? Now, how you can trade with this strong low here? You know now from my explanation that this is a strong low. Price is not likely to come and take it out. So whenever you are looking for your trade setups, you need to wait, first of all, between this strong low and this weak high. You need to wait for price to take out inducement first of all. All right? When price takes out inducement, then you can look for high probability POI. Now, there are only two POIs that work on your trading range. This is actually your trading range. This strong low here, weak high here is your trading range. So price will retrace. Remember, anytime price breaks structure, price will have to retrace. All right? To refuel before pushing higher in the case of a bullish structure. All right. So after taking out inducement, there are only two OBs that work. The first OB after taking out inducement is what is known as your DOB. So this can become your DOB in the market, guys. This is your DOB. Now, your DOB is 50-50 chance. It's a low probability point of interest. But your extreme OB is your high probability point of interest. So you can take your trade from there. All right? Your extreme OB is always high probability. Okay? And where do you put your stop loss? Because you have the knowledge that this is a protected low. This is strong low. Price is not likely to break it. So you will put your stop loss just below here. That's how to trade it. Simple. Simple, guys. You put your stop loss just below it. All right? It's as simple as that. I hope you understand. Now, let me quickly show you some examples on the chart. I don't want this video to be too long. Now, let's start from here. Take a look at this point. Let's start from here. Okay? Now, this is, let's see. This is actually a high in the market. Why? Because it took out inducement. Where is the inducement that it took out here? Well, this is the inducement that it took out. Took out that inducement to confirm this high. So this becomes your valid high in the market. Okay? Now, after that high has been printed, price rotated back down. All right? And tap on something here. I don't know what it tapped on. All right? And then it created this low. For this low to be confirmed as a valid low, it has to take out what? Okay? It has to take out this major structure high here. It has to go back up. Sponsor the move to take out this major structure high. If it takes it out and close above it, that means that this low will be confirmed. And as you can see, price close above it. So this becomes your break of structure. It's as simple. This becomes your break of structure. Okay? Now, where is your low in the market? Okay? So this is your low in the market. This low is confirmed now. Now, why? Because price has this low sponsored the move up that took out this major structure high. That means that with this condition in mind, this is a protected low. All right? This is protected. Because it sponsored the move up to take out this major structure high. So this low is protected. All right? If for any reason price now rotate back down to take out this low and close below it, all right? That will mean chalk. That will become chalk. Simple. That will become chalk in the market. All right, but as it stands now, this low is protected. Now this high is printed. This high didn't take out any liquidity, so it's null and void. And now the next high is printed. Now this next high took out this inducement here. Take a look. Inducement was taken out here. All right, to confirm the high. To confirm this high. Okay, so this is our new. So this is our high. That's our high in the market. Okay. Now, remember, this is a strong low. This is a weak high. How do we know that? Because already it indicated here when this low sponsored the move up to take out this major structure high. It makes this high to be weak, but the low is strong. All right. So when it now printed this high, took out this inducement to confirm this high, price now rotated back down to where? To some point of interest around here. I've told you that after how to trade this is that after inducement, you can take your trade. And as you can see, after inducement, where is your OB? After inducement, well, this becomes your valid OB in the market after inducement, this one. Remember what I told you? This becomes your valid, this is your DOB in the market. All right? As you can see, price took it out with candle wicks, not with closure. All right? And therefore, you could have gone to your lower time frame to take advantage and take price higher. All right? But price didn't go to break this high. It failed and came down. So this could have become your flip entry model. All right? Your flip. You can enter it through flip entry model. All right? Now, price now later came down to where your extreme OB. Where is your extreme OB here? Now, as you can see, everything here is just mitigated. Once everything is mitigated, you just look for where is your valid order flow here. Now, this is your valid order flow that price tapped into. Take a look. Price came down, went back up. All right? When price came down like this, all right, and went back up. All right? So this becomes your order flow in the market. Please try and understand. This is your order flow in the market. And price, I think price tapped on this order flow and went up. All right, can you see that? It tapped on that order flow and went up. Okay, so these are the two POIs that work on your trading range. This is your strong low, weak high. So let's continue to see. Now we are waiting for this high to be taken out, but if for any reason price comes to take out this low, that means that this uptrend is over. All right, so let's continue to watch what happens here. Let's zoom out. Now, as you can see, price came down. Instead of going up to take out that weak high, price rather came down to take out this strong low here and close below it. Can you see that? So this uptrend is over. Now we start looking for bearish opportunities. Simple as that. Your strong low, weak high, or your strong high, weak low will give you market bias. All right. Now, so this low is printed, but it didn't take out any liquidity, any inducement. So it's not valid. This one too didn't take out any inducement. So the next one we have is this one here. All right. This low here. For this low to be confirmed as a valid low, it has to take out inducement. All right. Because we are now bearish. Okay. And so where is the inducement here? Well, the inducement here is this one here. All right. So it took out that inducement. Inducement taken out. So this low is confirmed. This low is confirmed. Remember, we are bearish. The lows are weak lows in a bearish structure. Remember I told you that? The highs are strong highs in a bearish structure. Remember, we are bearish because price has already taken, there was a change of character here. All right. So now, price now, when it took out this inducement, it went up. All right. This is the way you trade the market. It went up and tapped on something here. All right. And dropped. Maybe it tapped on this. It tapped on this. This hidden OB here. I don't know. Let's see whether it really tapped on it. Oh God. Sorry. Okay, so it didn't get there. All right, it did not get there. Okay, sorry. Now, yeah, it didn't get there. So I don't know, maybe on your lower time frame, it tapped on something here and drop. Okay, remember, this is a structure point here. Look at it, this one. This is a structure point. Let me show you something here quickly. I don't want this video to be too long. This is a structure point. Price come from this high, printed this low, went back up. All right, take a look and then drop. Can you see? So this high becomes, let me show you. Let me pull it out for you to see what we have done there. Take a look at what we have done there. So this is a high. And so when price came, it wicked above this high. It wicked above it, this high. Took out liquidity there. All right. So you could have taken advantage of the trade there to take price lower. All right. But that is so far about that one. I'm just trying to show you some things here. Okay. So now this high cannot be confirmed until price takes out this major structure low here. All right. Remember, we are still bearish. So price took it out first of all with a candle closure, or I mean with a candle wick, but eventually it closed below it to confirm this is a valid break of structure. So this is a valid break of structure. All right. So price has sponsored the move down to break this structure point here, major structure point here. So this high is confirmed. And so therefore this high becomes your strong high, because we're in a bearish scenario now. This is your strong high. Price must not take it out. If for any reason price takes it out, then that means that we have changed direction from this bearish structure to bullish sentiment. Simple. All right. So let's continue to look at price. Now, when price took it out, it created this low. For this low to be confirmed as a valid low, it has to take out inducement. And where is your inducement here? Well, take a look. Now, this is your major inducement in the market here. This is your major inducement in the market. So it took it out, as you can see. So that's your inducement. And after taking out that inducement, this low is confirmed. This one is confirmed. All right. So that's your low in the market. Now, price, after taking out this inducement, price rotated back up to take out this major structure high here. Take a look. It took out this strong high. This is a protected high, but price took it out. What does that tell you? It tells you that the bulls have taken over the market. The bears were in control before, but now the bulls are in charge. They have taken, they're closed above this strong high. That tells you that they have overpowered the bears, and now the bulls are in control. That's how to use strong highs and weak lows. All right. And now this now becomes your low, your strong low. I mean, this becomes your strong low, and because we are bearish now, this turns to strong low now. Price didn't come down to take it out, so this is a strong low. All right. Now price created this high, but this high didn't take out any inducement. All right. But I mean, it eventually took out inducement here. Look at the inducement. It took it out here. It eventually took out that inducement. All right. To confirm that very high. So this high, this becomes your new high in the market. All right. That becomes your new high in the market. Okay. So this is your protected low. This high is a weak high. Why? Because we are now in a bullish structure. This is a protected low. If price comes to take out this low, this strong low here, it therefore means that this bullish structure is over. All right. But as it stands now, the bulls are in control. All right. The bulls are in control. They have forced price higher. Now, let's continue. What do you expect? You are expecting this high, which is weak high, to be taken out, and price should close above it. All right. So let's see whether that happened. Let's see whether it happens. Now, look at it here. Did it happen? Let's see. Did it actually happen? I think so. I think so. I think so. It closed. Yes. I think it closed above. It closed above. Slightly closed above. It's slightly closed above. Yes. It's slightly closed above. Because one has to be very sure of what we are doing. Yes, it's slightly close above. So this becomes, all right, it's slightly close above. So this becomes your strong low now. So this, your strong low, is now here. The new strong low is now here, all right? Because it has closed above, all right? It sponsors the move up to take out this major structure high. It is called break of structure. This one is called break of structure, all right? Remember, it becomes break of structure. And so this low becomes a strong low. If price comes down to take it out, that means that this bullish structure is over. All right. So now for this high to be confirmed, it has to take out inducement. And as you can see, inducement was taken out here. Inducement was taken out here, right here. All right. That's without inducement being taken out, your high or low cannot be confirmed. So now this is your new high in the market. All right. That's your new high. Okay, in the market. Remember, this is still your low here. Now, I told you how to trade these strong highs. I mean, strong lows and weak highs, or strong highs and weak lows. I've told you, this is your strong high. I mean, strong low. It's your protected low. Price cannot take it out. All right? Now, this is your weak high. So when price took out, broke structure here, price will retrace. And when it's retracing, after taking out your inducement, you start looking for opportunity to go long. All right? To go and break this weak high. And so where is your point of interest? I said 2 OBs work here. This is your first OB. All right, this is your first point of interest, which is your decisional OB. All right, that's your decisional OB. And as you can see, price tapped on it and gave a small reaction, but later failed. All right, it later failed. You could have taken advantage of this scenario here to take a flip entry model. But that's not what we're discussing today. All right. And then after this, your decisional OB, which I told you is low probability, you have your extreme OB. Where is your extreme OB here? Well, take a look at this. This becomes your extreme OB. Now, this one is already mitigated. So your extreme OB, you can use this as your extreme OB. This one. This week here can be your extreme OB. All right. Let's see. Yes. This can become your extreme OB. And so price is most likely to come tap on this extreme OB. Let's see. Yes, this is your extreme OB. All right, this is your decisional OB. As you can see, it reacted a little and failed. And this is your extreme OB. Remember, this is a protected low. This low is a strong low. Price is not likely to come and break this low. All right. So you can place your trade here and your stop loss will be below. Like I told you, your stop loss should always be below your strong low or above your strong high. All right? Because this is a strong low. It's not likely that price will come and take it out. Okay? It's as simple as that. It is so simple, guys. Once you understand your strong lows and weak highs and your strong highs and weak lows, then you are good to go in the market. All right? You will be able to know who is in control. You'll be able to know how to enter the market appropriately. I hope you understand what we have discussed here now. All right? If for any reason you are still confused and you have any questions, please drop your questions in the comment section and I will do justice to your questions. All right? I will do justice to your questions. And if you are new to our YouTube channel, please endeavor to subscribe. Give us your subscription and turn on the notification so that anytime we publish a new video, you'll be notified about it. All right? Please do that just immediately. And if you haven't joined our free Telegram channel, I will implore you to do that just immediately. Become part of the family, because right there we post high probability trade setups almost on daily basis, and you can take advantage of it and make some money for yourselves. All right? And if you want to be part of our VIP community, all right, we have opened our doors for registration for the January intake. Okay? Now, the registration will end January ending. We have reduced our mentorship fee so ridiculously. The reason is that we want to train more traders to become professional traders in 2024. All right? I bet you can never get it any cheaper and better anywhere else. I tell you. So take advantage of the registration, all right, and become part of our VIP community. Get to learn how to trade professionally. Become a professional trader in less than 60 days. And I mean it, in less than 60 days. Okay? The strategy we use is tested and proven. All right? It's tested and proven. And our training model is so simple that even a beginner can understand it. So take advantage of it. All right? And become part of the VIP community. All right, guys. I see you in our next educational video.